Owning a home, it's the American dream, right? But for many, that dream is starting to feel more like a financial nightmare. It's not just the down payment or the mortgage that's breaking the bank, it's the hidden costs of homeownership, those sneaky expenses that can quickly turn a dream home into a money pit. Think property taxes, insurance premiums, maintenance costs, and those pesky HOA fees. These often overlooked expenses are surging, adding thousands of dollars to the true cost of owning a home. For many homeowners, especially those on a tight budget, these hidden costs can be the difference between comfortably affording their home and struggling to make ends meet. In this challenging economic climate, it's more important than ever to understand the full financial picture of homeownership. We'll dive deep into these hidden costs, explore their impact on affordability, and offer strategies for navigating these turbulent financial waters. Inflation, that insidious beast, has sunk its teeth into the housing market, squeezing homeowners from all sides. The soaring costs of building materials, labor, and utilities have trickled down to homeowners in the form of higher property taxes, insurance premiums, and maintenance expenses. What does this mean for you? Let's break it down. Those routine repairs, they're costing you more. That new roof you've been putting off? Brace yourself for sticker shock. Even seemingly small expenses like landscaping and appliance upkeep are chipping away at your budget. The impact of inflation on homeownership extends beyond just these tangible expenses. It erodes the value of your savings, making it harder to keep up with rising costs. For homeowners on fixed incomes like retirees, the impact of inflation can be especially devastating. Mortgage rates have been on a wild ride in recent years, adding another layer of complexity to the affordability equation. After historic lows during the pandemic, rates have been steadily climbing, pushing monthly payments higher and putting homeownership out of reach for many aspiring buyers. Navigating the mortgage maze can feel overwhelming, especially in a volatile rate environment. Understanding the different types of mortgages, interest rates, and loan terms is crucial for making informed decisions. Working with a reputable mortgage broker can help you compare options and find a loan that fits your budget and financial goals. Don't forget about the power of a substantial down payment. A larger down payment can lower your monthly payments and save you thousands of dollars in interest over the life of your loan. However, saving for a down payment can be a significant hurdle, especially for first-time buyers facing rising rents and student loan debt. Experts divided, a tale of two forecasts. Economists and real estate analysts are divided in their predictions for the future of the housing market. Some remain bullish, citing strong economic fundamentals and continued demand for housing as factors that will support continued price growth. Others are more cautious, pointing to rising interest rates, persistent inflation, and the potential for a recession as factors that could dampen demand and lead to price corrections. This divergence of opinions highlights the uncertainty and complexity of the current market. Navigating this uncertain terrain requires careful consideration of both sides of the coin. It's important to stay informed about market trends, economic indicators, and expert analysis. However, it's equally crucial to remember that no one has a crystal ball. Past performance is not necessarily indicative of future results. The affordability crisis, a generational divide. The affordability crisis in the housing market is particularly acute for younger generations, many of whom are struggling to achieve the dream of homeownership. Saddled with student loan debt, stagnant wages, and rising living costs, many millennials and Gen Zers are finding it increasingly difficult to save for a down payment and qualify for a mortgage. This generational divide in homeownership has far-reaching implications. It threatens to exacerbate wealth inequality, as younger generations miss out on the opportunity to build wealth through home equity. It also has implications for the overall economy, as fewer young people are able to enter the housing market, potentially dampening demand and slowing economic growth. Addressing this affordability crisis requires a multi-pronged approach, including policies that promote affordable housing options, address student loan debt, and support wage growth. It also requires innovative solutions from the private sector, such as rent-to-own programs and shared equity models. Case study: the struggles of first-time buyers. Let's put a human face on this affordability crisis by looking at a real-world example. Meet Sarah and John, a young couple in their late 20s living in Austin, Texas. They both have good jobs, but they're struggling to make ends meet in a city where housing costs have skyrocketed in recent years. They've been diligently saving for a down payment for the past 3 years, but it feels like a losing battle. Every time they manage to save a little bit, housing prices seem to increase even more. They're starting to feel hopeless, like the dream of homeownership is slipping further and further out of reach. Sarah and John's story is not unique. It's a common refrain across the country, as countless young people find themselves priced out of the housing market. Their struggles highlight the urgent need for solutions that address the root causes of the affordability crisis. Seeking solutions, policy, and innovation. Addressing the affordability crisis requires a collective effort from policymakers, industry leaders, and individuals. Policy solutions could include expanding tax credits for first-time homebuyers, increasing funding for affordable housing programs, and implementing zoning reforms that encourage denser, more affordable housing options. The private sector also has a role to play in fostering innovation and creating new pathways to homeownership. This could include developing alternative financing models, such as rent-to-own programs and shared equity arrangements, that make homeownership more accessible to a wider range of buyers. Ultimately, creating a more equitable and affordable housing market requires a shift in mindset. We need to move away from the notion that homeownership is solely an individual responsibility and embrace the idea that it is a shared societal goal that benefits everyone. A glimmer of hope on the horizon. While the road ahead may seem daunting, there are glimmers of hope on the horizon. As inflation gradually eases and the Federal Reserve's interest rate hikes take effect, we may see some stabilization in the housing market. The ongoing development of innovative housing solutions, such as three-dimensional printed homes and prefabricated housing units, could also help to increase housing supply and make homeownership more attainable for a wider range of buyers. Moreover, the growing awareness of the affordability crisis is prompting policymakers and industry leaders to explore new solutions and challenge the status quo. This collective effort to address the root causes of the affordability crisis offers hope for a more equitable and sustainable housing market in the years to come. Conclusion: weathering the storm. The 2024 housing market presents both challenges and opportunities. While hidden costs, inflation, and fluctuating mortgage rates continue to impact affordability, there are strategies to navigate these turbulent waters. Understanding the full financial picture of homeownership, carefully evaluating market trends, seeking expert advice, and exploring innovative solutions can empower both buyers and sellers to make informed decisions. The path to homeownership may be evolving, but with patience, preparation, and a dash of optimism, the dream remains within reach. Don't forget to subscribe for more updates and insights on the housing market.